Most XRP holders are sleeping when it comes to privacy. This is one of the biggest new updates that'll bring financial institutions to come in and use the public version of the XRP ledger to do trades and move value. It's so exciting. We also had a big announcement coming out today. The XRP Ledger Foundation was teasing this yesterday, and just look, 1.5 million views, and you can imagine that everybody had to guess what this was. We find out today. You're gonna find out in this video. I got it all for you guys. But let's jump in. This is a video that a lot of people are talking about in the XRP space. Of course, it comes down to privacy, and privacy.
Hiding how much? What I'm talking about is who. So hiding like something closer to anonymity is something that we are thinking about. Yeah, in terms of transfers. Yeah, yes. Confidential transfers is about confidentiality. Now we're talking about anonymity. Yes. And that's a harder problem to solve on a public blockchain,
Right.
given all the constraints and compliance features that we want alongside. So that's definitely an active area of research. Other things are just, I think, the boring work, the optimization stuff, which we think a lot about, making sure that we have the cryptographic primitives specifically in place such that as we are evolving and trying to integrate more and more ZK technologies, how do we make sure that we have the right primitives in place? How do we harden them? How do we improve the primitives that we are using? For example, we're thinking about Bulletproofs plus. That's a more performant version of Bulletproofs that we currently use. So that's one thing, but it's not battle tested. So we are still in the exploratory phase there. Then yeah, those are the things that.
All right, a lot of stuff going on there. When she says ZK, she's talking about zero knowledge proofs, okay? And so what I want you to understand here as I go through this information, these are the updates of what financial institutions are most interested in to use public blockchains. Because for years, we heard that institutions would never use public blockchains because all of their transactions would be, out there for the entire world to see. And how are they going to do, anything if every competitor that they know or every other client they know can see every transaction? They're not going to use it, right? And so you have to build in these privacy layers that allow them to use all of this incredible functionality of the XRP ledger and the liquidity of the XRP ledger, but also have that level of privacy that they're going to be able to build and trade on. So the XRP ledger is being rebuilt as a programmable privacy settlement layer. Institutions can keep positions and flows confidential while still proving correctness, keeping auditors happy, and settling on public liquid L1. The combination, privacy as a feature, not darknet style anonymity, is exactly what banks and regulated financial institutions have been waiting for. And so here are some of the things that are actually happening so you have a better understanding. Interledger plus private XRPL networks. Ripple's original play for banks was the Interledger plus private versions of the Ripple network, with Interledger protocol offerings enterprise customers a solution that maintains customer privacy, allowing users to keep aggregate transaction data off public blockchains by using a connector to move funds between private versions of the Ripple network and, of course, the XRP ledger. This directly targets a core bank objection. Competitors must not be able to see volumes, pricing, or liquidity routes, even if final settlement happens on a public chain. The next here is confidential multi-purpose tokens. RippleX research has proposed confidential multi-purpose tokens on the XRP ledger that encrypt balances and transfer amounts using EC-ElGamal plus zero knowledge proofs. Validators can verify that no extra tokens are printed and that senders have the funds without ever seeing the amounts or balances. So they can verify you have the money to do what you want to do without actually seeing that you have the money. This is kind of the system that they're building here. Critically, this is not Monero style black box. Accounts identities remain visible and total tokens stays audible. So this is for auditors and like let's say the SEC or the IRS that want to make sure that things are on the up and up, which keeps regulators and issuers comfortable. Programmable selective disclosure. Confidential multi-purpose tokens include selective disclosure. Holders can give auditors or regulators a viewing key to verify history and balances without making the data public. There you go. They can get this viewing key and they can see all of the trades, which gives them all the compliance that they need to do to make sure that they are complying with the law, right? That's if you're going to be in traditional markets, there's a set of rules. You have to comply by those set of rules. If you don't, well, the US government's going to come knocking on your door. Issuers such as banks or stablecoin providers keep controls like freeze, clawback, and forced recovery so they can't meet KYC. Issuers such as banks or stablecoin providers keep controls like freeze, clawback, and forced recovery so they can meet KYC and AML sanctions and fraud mechanisms. You also have the XRP Ledger core upgrades aimed at institutions. RippleX has publicly framed its R&D roadmap about privacy, zero-knowledge proofs, and post-quantum security to future-proof the XRP Ledger as a financial settlement layer for institutional payments and tokenized assets. And says the roadmap for 2025 to 2026 includes the confidential multi-purpose tokens, permission DEX venues, where only credentialed entities can trade real-world assets and securities, token escrow for all tokens, not just XRP. You always hear about the XRP escrow that Ripple has. That for a long time, you can only escrow XRP on the XRP Ledger. Now, you can pretty much escrow anything, any multi-purpose token, any stablecoin. It does really open up your abilities to what you want to do. Smart, programmable escrows and native lending for institutional credit, underwriter, off-chain, but enforcement on-chain. And of course, hooks and compliance for smart contracts. Hooks add lightweight WASM-based smart contracts to account level so banks can, for example, auto-reject payments from non-whitelisted addresses and enforce custom compliance logic on-chain. All right, and then also the big picture narrative here. All right, to sum it all up here, compliance and identity rails, decentralized IDs, you have credentials, you have permission domains, you have permission DEX, you have clawback and freeze, you have token escrow, you have stimulate. You guys, there's so much here. There's upgrades to the AMMs, right, that they're working on too. Stablecoin and real-world asset focus and multi-purpose token focus. Basically, the new institutional layer that you're going to see out in the world is being built out, delivered right on the basic layer one of the XRP Ledger, which is going to bring a lot of demand, volume, business, new use cases, and all of the above. Bank XRP, XRPL's multi-sign isn't a smart contract patch. It's built directly into the protocol itself. While 86 Gnosis Safe just got drained for 3 million on ETH and Base via a third-party exploit, the attack vector literally doesn't exist on the XRP Ledger. Native features aren't a flex, but they're a difference between safe and drained. So, you're having a lot of issues with hacks and different things happening on ETH-like protocols. Some of that stuff just doesn't exist here on the XRP Ledger, which could be beneficial for, institutions wanting to build here. And the XRPL integrates boundless ZK privacy infrastructure for banks, solving one of the biggest barriers to institutional use. The XRP Ledger has officially integrated with Boundless XYZ, a zero-knowledge proving network, bringing a new layer of institutional privacy to the XRP Ledger. This would solve one of the biggest problems for banks, funds, and large institutions using public blockchains are too transparent. With zero-knowledge proofs, institutions can prove a transaction is valid, funded, and compliant without revealing the sensitive data publicly. All right, and then also I did want to get here to some of this growth, what we're seeing here. Tokenized assets sitting at 34 billion. All right, that is growing. I like it. McKinsey says 2 to 4 trillion by 2030. Citi says 5 to 6 trillion, and also BCG. Ripple says 9.4 trillion, and Standard Chartered is calling for 30 trillion by 2033. Let's call for 100 trillion by 2033. I mean, if the DTCC is able to bring all of their assets on chain in the next 2 years, you're already at 100 trillion, right? Technically, you are. And of course, I always like to keep up with my real-world assets.xyz and see where we are here. Take a look here. The XRP Ledger is still at 4.1 billion. And if this does move, I will let you know. So now here was yesterday where everybody was, guessing and trying to, pretend like, hey, what's going to happen? And everybody had, look, people were saying 5, 8, 9, because there's 5 dots, 8 dots, 9 dots here. And you do a 360 and that's Circle. So Ripple was going to buy Circle. A lot of people believed that's what was going to happen, and it was just pandemonium. If Ripple wanted to buy Circle today, it'd be in the $20 billion range, I would think. Maybe $28 billion is how much they would have to come up with. Because after Circle, launched an IPO, stock's worth a lot more. The company's worth a lot more. They have more connections. They have more use cases, more everything. And it's not $6 billion anymore, right? That looking back, hey, that might have been a good deal at 6 million. I'll take two. Wait, it's 28 billion? Oh man, that's too much. Yeah, that's where we are. The XRP Ledger Foundation has introduced a new standard enabling StableSwap and concentrated liquidity curves on the XRP Ledger DEX. This upgrade significantly improves capital efficiency, delivers more stable pricing for stablecoins, FX, real-world assets, and other correlated assets while reducing slippage and enabling overall liquidity depth. Key benefits include greater capital efficiency for liquidity providers and tighter spreads and reduced impairment loss risk, stronger foundation for institutional grade DeFi applications. So we were a little off here on the buying circle, but there's a lot of things happening with the XRP Ledger Foundation right now. And if you want the details here, there's a link to GitHub and everything's posted here. I wanted to better understand this because this is also new and I'm still learning about it. And so if I'm gonna like talk to you about it, let's have a little bit more information on why this is important, right? So this is like AMM V2. It's an extension of XLS 30, not a separate DeFi app. So it inherits the XRP Ledger's low fees, fast settlement, and hybrid order book plus AMM DEX design. Direct impacts on the XRP Ledger DeFi. Liquidity providers can now concentrate their liquidity in tight price bands or around pegs, earning more fees per dollar deployed and taking back more tailored risk profiles. Stablecoin pairs, FX pairs, and real-world asset tokens on the XRP Ledger can trade with near zero slippage corridors, which is exactly what institutional market makers and payment flows want. Combined with the XRP Ledger's continuous auction mechanism, also called CAM, the system is explicitly designed to keep on-chain prices in line with off-chain markets while redistributing arbitrage value back to the LPs. All right, now let me show you this because I want to understand what are the benefits to us here and how is this going to change and impact the XRP Ledger as we're learning. The AMM V2 upgrade is a big deal for the XRP Ledger's DEX and DeFi stack. It indirectly is bullish for XRP because it deepens the on-ledger liquidity, improves pricing for key asset pairs, and makes the network more attractive to serious capital and builders. What changed during this upgrade to AMM V2? I'm glad you asked. The new standard adds stable swap curves and concentrated liquidity curves. These are kind of Uniswap V3 style clam at the protocol level of the XRP Ledger DEX. These curves dramatically increase capital efficiency so a smaller pool can handle a much larger order size with tighter spreads and lower slippage than the original AMM design. It's an extension of XLS 30, not a separate DeFi app, so it inherits all the XRP Ledger's low fees, fast settlement, and hybrid order book plus AMM DEX design. The direct impacts here for the XRP Ledger and DeFi, liquidity providers can now concentrate their liquidity in tight price bands or around pegs, earning more fees per dollar deployed and taking a more tailored risk profiles. Stablecoin pairs, FX pairs, and real-world asset tokens on the XRP Ledger can now trade with near zero slippage corridors, which is exactly what institutional market makers and payment flows want. Combined with the XRP Ledger's continuous auction mechanism, also called CAM, the system is explicitly designed to keep on-chain prices in line with off-chain markets while redistributing arbitrage value back to LPs, mitigating impairment loss. And what it means for XRP holders, more reasons to hold XRP on the XRP Ledger. Every incremental DEX trade, pool, real-world asset, or stablecoin corridor that settles via the XRP Ledger inherently reinforces demand for XRP as the native gas asset and a bridge asset in many pairs. Stronger narrative for institutional DeFi. Ripple has already been pushing the XRP Ledger as a top-tier institutional DeFi and real-world assets chain. Richer AMM functionality is another proof point that the ledger isn't just payments only anymore. It's built with the full capital markets rail. Better liquidity for XRP pairs, concentrated liquidity around key XRP pairs, which could be like XRP FX, XRP real-world asset, XRP stablecoins, should mean tighter spreads and deeper books, which tends to reduce volatility spikes and makes the assets more attractive for serious traders and large payment flows. Opportunities here, yield and LP strategies. Retail XRP holders can deploy XRP in a more sophisticated pool, earn higher fees and APRs, but with the usual LP and peg risk caveats. UX and tooling gap, the big upside only materializes in the front ends. Aggregators and wallets make these curve choices intuitive, otherwise misconfigured ranges can underperform simply holding spot XRP. And systemic upside versus protocol risk, because AMM V2 is at the protocol level, it benefits from the XRP Ledger security model, but it also becomes part of a systemic surface area. So if you'll want to watch the audits, the upgrades, initial liquidity migration, and how that's handled. So a lot of upgrades coming to the XRP Ledger right now. That's what was teased. Don't let anyone tell you differently. I know a lot of people were speculating, but that's what we know. If we get updates or other things that get announced with, everyone's waiting for, and this 589, I definitely will tell you and give you that information. And of course, the privacy era in crypto has officially begun. We are starting to see that here on the XRP Ledger, and that is going to bring in a lot of use cases, a lot of institutions, a lot of capital, and that's what we need, guys. You know, if you look at transaction volumes and you look at all of these things, new wallet creation, you need that to start going crazy. And the only way that does that is with institutions coming and using the XRP Ledger for trading and all these other venues. Ripple's interledger protocol directly addresses banks' privacy concerns. So there's multiple ways now you can do this. Interledger protocol side, you can also just use the regular XRP Ledger. Interledger protocol is also a bid to offer Ripple's enterprise customers a solution that they argue maintains customer privacy, allowing users to keep aggregate transaction data off a public blockchain by using a connector to move funds between private versions. Now, like, my question would be, why wasn't this done before? Like, if they had the option to use interledger protocol, why were institutions using this? And I think it still comes back to regulation, right? You can have the system, you can have interledger protocol, now you can have the XRP Ledger and all the upgrades that is coming with it. But if you're in the United States here and you don't have the right rules to say, can I use the XRP Ledger to make these trades, right? If the next person that comes in after the SEC director and CFTC director that we have right now, Paul Atkins and Michael Selig, if they are anti-crypto and we don't get regulation, is that person going to say every transaction that I used on the XRP Ledger with all these privacy features, are those all illegal? Right now, what happens to my bank, my institution, my license? Do I lose that, or or are there fines? Is there jail time, right? These are all things that these large financial institutions are never going to risk, and that's why they need the proper rules. So we'll get clarity and then we'll move past this, guys. And of course, XRP is the first enterprise-ready digital asset. I mean, I'm so thankful to have met people in the XRP space. I'm so thankful to wake up every day to learn and grow and share everything that I am doing here. I hope it's been helping you at home. That's the goal here, to learn and grow together. And this is a journey and we're on it together. And I consider it an absolute honor to be with you here. And we've been through a lot of ups and a lot of downs, but I think where we're going here is where we think where it's going, where the entire world is going to be using blockchain technology in some way. And you also have AI agents that are going to be coming in and using blockchain technology. So almost every transaction that's going to happen in this new world of payments is going to happen on blockchain. And the blockchains that solve these problems at scale, the blockchains that are able to offer, transactions under a cent in 3 to 5 seconds with all of the security and maybe all the privacy that people want, those blockchains are going to be the biggest winners out of all of this. And if you take a look right now at Ethereum, the sentiment is not great in the Ethereum community. If you are a financial institution, you're coming in, you're looking at Ethereum, you're looking at maybe the XRP Ledger, you're looking at SUI, you see all of this negative talk in the Ethereum space, it probably makes you a little uncomfortable. But you see all of this hype and you see all of these people loving what's going on in XRP, and you see Ripple, right, and everything that they've been doing. People might gravitate to that. Financial institutions might gravitate to what Ripple has to offer, because I mean, if you take a look in almost any one of their businesses, anytime that they go in and they take over a business, the money that comes in triples, doubles, triples very quickly, right? And they're able to turn that business around just by integrating the XRP Ledger technology, stablecoins, and everything else that they're doing. So they have a lot of this power. They have a great marketing team, and I think it's going to help create just this great narrative around XRP while other ecosystems are hurting right now. All right, I'll leave it there. Thank you so much. Like, share, comment. That all helps the video here on YouTube. I greatly appreciate your time. As always, thank you so much. I will see you next time. I'm Crypto Sensei.